Welcome back. You're watching HFO-TV.
We're actually seeing in the last 4 to 6 months, and we'll show it up here, increased demand in the suburbs. We saw this market turn around after '09. This is just gives a brief kind of demographics with the Gen Z and the millennials being such a large percentage, the prime rental apartment age. They're the ones that are kind of driving this demand. And it, combined with the strong job growth in Portland, they're all coming to the core. Combine that with the lowest home ownership we've seen since 1989 in the low supply, again, just in the city of Portland, has driven us to steady rent growth that we've seen since 2010. And according to the Metro Multifamily report that just came out, the average rent is $1.24 within the market per square foot. We've seen vacancies below 5% since 2010. And so this solid rent growth continues with low vacancy and solid renter demand, adds up to, there's the rent growth graph here. We've seen, now again, this graph here shows larger complexes, but we've seen some markets north of 10%, and we've seen kind of across the board within the city of Portland, again, astronomical rent growth for the last 2 to 3 years. This all adds up to a terrific apartment market from an operations standpoint. The next slide will show kind of a snapshot between March of 2010 and March of 2015, where we were with vacancy rates, effective rents, and then annual rent growth from the previous year. And you can see that the last year has just been astronomical for apartment owners in terms of operations. Now, when you get a market like that, what you're going to see is development. And the other thing that's kind of added to this is the availability of construction financing. But again, all the development is really centered on a couple submarkets. It's close in, which is represented by close in East Side here, close in West Side, and then some of the North Portland units are also would be considered close in. And then the other balance is on the outer West Side in Washington County, which is pretty typical as what we've seen in my career in the last 25 years. Is you'll see a lot of development on the West Side, Intel, Nike. But to have this much so located within the city of Portland is something we haven't seen for years. I mean, never seen it actually. And this is all driven because of the strong market fundamentals in terms of the operations of the apartments. In terms of transactions, last year was a banner year for the city of Portland, or for the brokers in the city of Portland. A lot of that was fueled by large institutional, and we say institutional, that's 10 to 15 million price and up. It only takes a few of those to really drive that, but that's what really drove the volume in terms of sales last year. This year, this is through May of this year, we're going to break a record with non-private equity, non-institutional deals under 10 million. We'll pull past that mark. On the institutional side, it's probably too early to tell, but that's not unusual. We'll get a lot of deals that close in third and fourth quarter. So that we may not break the record we did last year, but it'll still be a phenomenal year in terms of sales volume. But again, the interesting thing that we've seen is you're seeing it now in the non-institutional private equity side, a lot of demand, a lot of investors looking for yield, and are going out to Gresham and Milwaukee and things like that, again, on existing product. Valuations, we talked about this. We've seen an increase in valuations across all sectors. Institution, private client, core, tertiary markets, it's been across. The reason for the increase is increased rents and the continued low interest rates. On the institutional side, we've seen cap rates have been at historical lows. We've seen a little bit of variance on that, not a lot. Their appreciation or in value increase has been based on the rents. We've seen this massive increase in rents. A lot of the institutional sales have been core located assets, which have experienced this great growth, and that's where a lot of the price appreciation. On the private client, we've started to see cap compression. In some of the secondary markets or CB properties, we've seen cap rate compression combined with higher rents. So you kind of get the double-edged benefit there. The negative influences, the same ones we've been talking about for the last 2 years. Interest rates going up and cap rates increasing as well. Wage stagnant. We're not getting any wage growth. We have wage growth that's either in the higher end, but in that middle group that we're not seeing any wage growth. The cost to buy ratio, the cost to rent versus buy ratio, when do we come a point? And this really, when we're looking at this, really looking at it in the core in terms of how deep is that higher end rent market when you're getting $3 a foot for rent versus what to buy. The supply for new homes is pretty tight in the Portland area. And then the impact of new construction. We've been talking about this for 2 years, have not really seen the effect of it so much, though we're starting to think, this coming year, it's going to happen. When you have 400 units on the one corner, it leaves some questions. For the update for where we see the rest of the year going, we'll see continued renter demand. We don't see that changing. Portland's still a place to be. Young millennials want to live here, and they do come here with or without jobs. The Portland vacancy rates we think will increase a little bit. That has more to do with the absorption of new units, but will still remain one of the strongest in the United States. Rents will increase. I'm just not confident to say we're going to see 9% rent increases across the market. I think that's going to slow down a little bit. Institutional transactions, the reason there's a question mark, we just don't know if we're going to break the record of last year. It's still very strong. That's not to indicate that there's not strong demand. Demand has been off the chart. I just don't know if we'll have the same number of institutional transactions we had last year, but that's not indicative of price or cap rate. The cap rates are still low, and the pricing is still great. I mean, we just sold in the process of selling a deal out in East County in Gresham. That's, the highest comp last year was about $100,000 a unit, and we'll be north of $125,000 a unit on a deal out there. So just to show the demand is still strong. It more has to do with the volume. On the non-institutional, we're seeing transactions increase. We're seeing a lot of private clients that are looking at the valuations, have kind of weathered the storm in 09 and 010 and looking maybe to exit the market or reallocate some of their assets. And because of that and because of the demand, we think valuations will continue to increase. Again, the big thing unknown is the interest rates. When that changes, if it does, there may be some variations on that. So that's kind of a snapshot of what we've seen the last 6 months in this market. So thank you.
Our entire office specializes in multifamily real estate, making HFO the largest multifamily brokerage in the Pacific Northwest. Your success is our passion. Build your legacy with HFO. Call 503-241-5541 or visit our website at hfore.com for more information.